I'd love for you to just take me into what it's been like for your company over the past week or so, maybe longer, as you've watched the activity in these stocks and the kind of conversations and decisions you decided to take and make around whether or not your customers were allowed to trade in them.
Sure. Well, thanks so much for having me, Amber. And, you know, it's this last week comes on the back of what has been a very big year for retail trading across the industry. You know, there's no surprise that COVID has been a huge boon for this industry, which is just seeing record volumes. And then add on top just the tremendous retail demand that has taken place in the last week, with stocks like GME and AMC being driven by this unprecedented retail demand. It's really remarkable. I mean, from our perspective, even on top of the volumes that we've seen, Wealthsimple Trade has catapulted to the #1 spot in the App Store overall. We're seeing signups, you know, north of 50% higher than they were last week. Volumes on a daily basis more than 2 times higher than they were, and a really unprecedented demand for investing.
Are you concerned about the risks that investors are taking on through your platform, and what are you doing about that?
We are, and I think we take the responsibility to equip investors with the knowledge they need to be thoughtful and responsible very seriously. And so we've done a number of things in the last few days to try to get ahead of this as people are trading on the fear of missing out and on an emotional basis. We sent out emails reminding people about the risks associated with speculation. We've embedded in-app notifications for people that are looking at these stocks, reminding them that if they do want to trade them, there is an enormous amount of risk that they're taking in this kind of a market environment. And our position as a company, especially in the brokerage market, is where we can't offer financial advice, is that we want people to arm themselves with the knowledge they need to be successful, to be aware of the risks. Ultimately, if people are taking calculated risks and want to join in on the fun, but are doing it in a responsible way with an amount of their portfolio that they can effectively lose if and when these stock prices do come down, that's okay. But we want to make sure that people are being responsible, and we're trying to be as proactive as we can about that messaging.
Try to understand this new world of finance, and you hear about the democratization of financial markets. You know, that's in part been your rallying cry as you've built this business. You know, why do you have to, as an investor, pay the kind of commissions? Why can't you, as someone who wants to be able to buy and sell on your phone, use technology that is at your fingertips? I can't imagine you could have ever anticipated a pandemic where everyone would basically be stuck at home and you would see a surge there. And then this other ripple effect here where you just have this growing group of online investors who seem to be driven by a different narrative than what we have traditionally seen in the markets. So what's your take on that? I mean, are there days where you feel overwhelmed? The CEO of Robinhood told Bloomberg yesterday that he just felt like Clorox, you know, in the early days of the pandemic. It's nice to have demand, but it's hard to anticipate overwhelming demand.
I mean, there's no question about that. You know, we've seen our peers in the brokerage industry across North America struggle to keep up with downtime across the industry. And we've been very fortunate that we have avoided that to date. You know, we have an incredible team that is working remarkably hard to deliver on what we think our responsibility is to deliver a reliable and safe investment platform, and then to educate our clients. And so I think we've done that really well, but the Clorox analogy is right. The demand is unprecedented. And speaking with people that have been in this industry for 30 years, I don't think anyone's seen this kind of a demand this quickly in the past. It is remarkable. And to go back to your point, I think that, you know, for me at the highest level, demand in investing is an important thing. You know, we started this company 6 years ago with the belief that giving people the tools to be smarter about their finances, to start investing so that they could achieve long-term financial freedom is a really important thing. And people can start anywhere along that spectrum. So I think a boom in demand is such a great thing, you know, for the industry. However, as we talked about just before, there are real risks. And I think we have to walk that fine line of using this opportunity to bring more and more people into the capital markets and into the opportunity of investing and what that can mean for their financial futures, but to also remember that investing carries risks, and it does require thoughtfulness, a long-term thinking, and it's a remarkable and unprecedented period.
Well, given that, and every new day where you see all this activity in the market, it feels more like a moment for those who are trying to sort of push past it and say, well, it's one stock, it's one day, et cetera, et cetera. What would you like to see going forward? Because literally in real time right now, we are seeing some of the best known, very vocal investors who have had a different approach, selling stock short, literally changing their strategy overnight. What kind of conversation do you want to see in this country around everything from, call it short selling, to regulation for a new age of investing?
I think that's a great question. I mean, for us, the principles that matter most here are about investor protections. And in the brokerage industry, you know, you have to respect that people can make their own decisions. So this isn't about controlling people and telling them what they can and can't do. But you have to find the right ways to educate them and make people aware of the risks. And I think that a regulatory regime that understands it, and by the way, it extends beyond just the securities regime and into crypto, where you're seeing also unprecedented amounts of demand. It is also a highly speculative currency or speculative, type of investment vehicle that people are accessing right now. And we need the same level of principles-based regulation that puts the investor protections first. That's all about equipping people with the information they need to make informed and responsible decisions. And so I'd love to see more of that across the industry and consistently applied across the industry to take advantage of this unprecedented demand, which could be such a force for good for people in the long term, but needs to be tempered by that understanding that markets go up, markets also come down, and people need to be prepared for that.
One of the things that this frenzy has exposed in apps like Robinhood, but also, you know, the likes of Interactive Brokers, is just how vulnerable they were to just market structures. The fact that their clearinghouses were requiring more collateral than they were able to currently put up. And so they are saying that's one of the reasons that they had to stop the trading. And I'm curious, could you maybe tell us more about how Wealthsimple is set up? Was that a consideration? Is that something that could happen at Wealthsimple that could ultimately force you to potentially stop trading, at least temporarily, in some of these stocks?
It's a great question, and there's, I think, been a lot of misinformation around this, driving a lot of the narrative that you do see on the internet. But from the Wealthsimple perspective, we see our role as really providing a safe and reliable brokerage platform for people. And we don't plan to restrict trading in any of these securities. We look to the regulators to tell us if they are going to be halting securities. We'll take our cues from them, but we won't be making those decisions ourselves. And I think one of the things that is different and unique about Wealthsimple is today we do not have margin or options on the platform. And a lot of the source exposure that these U.S. brokerages are facing and why you've seen just the need for capital injection, it comes down to the margin and options exposure in the industry and some of the risks that presents. But none of that exists in the Wealthsimple story, in the Wealthsimple structure. And so we have a very different position in the market. We're incredibly, fortunate to be in a very strong place. And as I said, we see our responsibility as simply providing a safe and reliable brokerage. And we will be looking to the regulators rather than making any of those decisions ourselves.
Is that something that Wealthsimple sees as a potential growth area, as you're seeing more and more retail investors use options and it become more accessible to them? Or has some of this frenzy and some of the exposed risks that some of the risks you could be exposed to made you think, you're quite satisfied that you're not there yet?
I think that's also a really important question. I mean, options, margin are both just investment tools. There's nothing inherently wrong about them. However, as you're seeing now, they are extremely risky. And I think the real risk is when you have a lot of new investors that don't know what they're doing, getting access to these tools prematurely before they really understand them and taking outsized risk with them. And so I think if we were to ever introduce services like that, enabling it in a way where we could live up to that principle that we spent a lot of time talking about today around how do we equip investors so that they can be responsible and thoughtful is top of mind for us. So that's kind of the approach that we're taking here. Is there's nothing wrong with those tools. We have no immediate plans to introduce them. And if we did, just how could we do it in a way that helps people be responsible? Because I think the gamification of these highly risky tools is problematic and could result in some very bad outcomes for people. And we don't want to be a part of that.
Well, I just want to pick up on something you said earlier, which is recently enabling Bitcoin trading on your platform. I'm just curious, how's that going? What kind of uptake have you seen, and what kind of parameters are you trying to put around that with your risk profile and education of your customers in mind?
I mean, we are big believers that cryptocurrencies, decentralized finance are really exciting areas to pay attention to. The implications of these technologies are pretty vast. And so we're excited to be the first regulated crypto platform in the country. And I think it was very important to us to work with the regulators to introduce this capability to Canadians. You've heard of horror stories of Canadians losing a ton of money going with platforms that had trouble, that were perhaps not trustworthy. And it was important to us to work with the regulators to introduce this in a safe and reliable format. And it's all under the same principle, is how do we onboard clients into this new asset class that we think is going to have a really important future for this industry, but do it in a way where they're equipped with the knowledge to know it's a highly volatile security or asset, and they need to be thoughtful about it. And the best example of that is, I think the day we launched the crypto offering, we released a blog post and we sent an email to clients with the subject line, why you shouldn't buy Bitcoin and why you shouldn't trade in cryptocurrencies. We just always feel this responsibility to remind people about the risks of these activities. And so they do it with eyes wide open and are being thoughtful about the role of crypto, the role of individual stock picking as part of a broader financial plan. And we also have our long-term investment strategy, which is what we hope is going to form the core of clients' long-term approach, whether they do it themselves or they have us do it for them. And some of these things around really betting on individual stocks, betting on cryptocurrencies to form a play money account on the margins as opposed to the core of someone's portfolio.